GST on old used vehicles, key changes effective January 2025. In its 55th meeting, the GST Council raised the tax rate on used vehicles from 12% to 18%, effective 16 January 2025. This simplifies the tax structure for two-wheelers, three-wheelers, small cars, and EVs. The increase applies only to registered taxpayers transacting used vehicles and is levied on the margin value, exempting personal sales and unregistered sellers. While costs for buyers may rise, the rule clarifies tax calculations. Uniform GST rate of 18% on used vehicles. The GST Council's decision introduces a uniform 18% GST rate on the supply of second-hand or old vehicles. This includes two-wheelers, three-wheelers, small cars, and electric vehicles. Previously, some vehicles already faced an 18% rate, such as petrol cars with a larger engine capacity. The new GST rate simplifies the tax structure by having a single rate for all vehicles effective 16 January 2025, but only applies to registered taxpayers. Two-wheelers will now be at 18% uniform rate on old vehicles. Electric vehicles. A single rate of GST at 18% on supply sale of all old and used vehicles including electronic vehicles. Small cars. Rate increase from 12% to 18% on sale all used and old vehicles. GST rate increase, exclusions and clarifications. The GST rate hike excludes specified vehicles already taxed at 18%, such as petrol vehicles of engine capacity of 1,200 cubic centimeters or more and of length of 4,000 millimeters or more, diesel vehicles of engine capacity of 1,500 cubic centimeters or more and of length of 4,000 millimeters and SUVs. New EVs are taxed at a lower rate, whereas old EVs will be taxed at 18%. GST is applicable only on the margin amount, i.e., the difference between the purchase and selling amount. Exclusions. Specified vehicles already being taxed at 18%. EV tax. EVs shall be taxed at 18% whereas new EVs are taxed at a lower rate. Margin amount. GST is applicable only on the positive margin amount. GST only on the margin amount. GST is applicable only on the value that represents the margin of the supplier, that is, the difference between the purchase price and selling price. The depreciated value is excluded if depreciation is claimed. The tax is not applicable in the case of unregistered persons. Thus, the levy applies only to the margin, offering some relief to sellers and buyers. The rules ensure that the tax applies fairly. Purchase price. The amount the supplier purchased the vehicle for. Selling price. The amount the supplier sold the vehicle for. Depreciated value. The value that has been reduced from depreciation is excluded if depreciation is claimed. Changes at a glance. Here's a quick overview of the changes. The coverage includes used and old vehicles, with EVs now covered. There is a common or single rate of 18%, and only registered persons will pay. Individual or personal supply has no GST, and the margin excludes depreciation. There is no tax on a negative margin, and the tax applies to the margin, that is, the difference between consideration and depreciated value on the date of supply. Relevant Valuation Rule, Rule 32(5) of CGST Rules, 2017. Rule 32(5) of the CGST Rules, 2017 already states that if a taxable supply is provided by a person dealing in buying and selling second-hand goods, where no input tax credit has been availed, the value of supply shall be the difference between the selling price and the purchase price. If the value of such supply is negative, it shall be ignored. This ensures tax is levied only on the positive margin. Value of supply. Difference between the selling price and the purchase price. Taxable supply. If a taxable supply is provided by a person dealing in buying and selling second-hand goods. Negative value. If the value of such supply is negative, it shall be ignored. GST rates and notifications. GST rates are prescribed in Notification No. 1/2017 CT, rate, dated 28 June 2017. Wide Notification No. 4/2025 CT, rate, dated 16 January 2025, Notification Number 8 stands amended, effective 16 January 2025. The tax rate on old and used vehicles taxable at 6% central tax, 12% total, has increased to 18% WEF 16th January 2025, meaning GST on all old and used vehicles including EVs is now 18%, 9% central, 9% state. Notification January 2017. Original GST rates. Notification April 2025. Amends the rates. Notification 8. Further amendments. Impact on buyers and sellers. While a new car attracts lower GST on total value, a used car will now be subject to 18% GST but only on the margin in terms of Rule 32(5). Since the tax burden will be passed on to the ultimate buyer, it will be a cost hike for the ultimate buyer. The tax would be on the margin amount, difference between buying cost or depreciated value and selling price. This may lead to slightly higher prices for used vehicles. GST on margin. 18% on the difference between purchase and selling price. Cost hike. Tax burden passed to the ultimate buyer. Rule 32(5). Tax is calculated as per valuation rule. Conclusion: navigating the new GST landscape. The GST rate increase on old and used vehicles aims to simplify the tax structure, but it also introduces new considerations for buyers and sellers. Understand.